In December of last year, my show did a controversial episode about Genesis. We speculated that a bankruptcy was possible, and about a month later, we were unfortunately correct. Late last night, around midnight, Genesis dropped the end of the week damage control press release to announce their official bankruptcy. And by the time this episode airs, Genesis could have set off another domino or two. We welcome back attorney Aaron Kaplan to help us analyze the implications of this latest bankruptcy in the cryptocurrency space. Aaron, welcome back to the Daily Drop.
Thank you for having me.
Well, look, it's always nice to see you, but I wish it was under better circumstances. But let's start at the beginning here with a little recap. For anyone unfamiliar, can you recap how this Genesis bankruptcy happened?
Genesis and arguably its parent, the Digital Currency Group, had exposure to Three Arrows Capital and then to FTX. And they had issued a yield product called Earn with Gemini. And when the market turned, they were forced to halt withdrawals, which then had the knock-on effect of having Gemini as well halt withdrawals.
Right. And why is the bankruptcy of Genesis so significant?
I think it's because they're a major player in the space, and they're part of the Digital Currency Group conglomerate, who's been a major influence and has their tentacles in a lot of areas in the space.
Yeah, and so you brought up DCG, which is good, because it leads to my next question. Because DCG, Digital Currency Group, the parent company, it's one of the largest oligopolies in the crypto space. So are there worries that they could potentially be vulnerable to bankruptcy themselves?
Again, I don't know any specifics. It just becomes a question of what their exposure is to the underlying issues that Genesis and other potential of their subsidiaries might have.
But this is really the issue, right? It's that we don't really know who's exposed to whom, and you're seeing it's really like a string of bankruptcies at this point where everybody, I think, is going, okay, so who's next to go down? Is that fair?
Well, I think with the bankruptcy filing, what we're going to see is these events come to fruition and we'll have some sort of resolution. I understand the bankruptcy is arguably some sort of negative act, but it's also the path towards some sort of resolution to the underlying matter and hopefully getting the customers, particularly the earned customers, back some of their funds.
And, I've been just checking out Twitter, and some of the reactions are pretty intense. I mean, there are quite a lot of people losing money. There's quite a lot of people who are quite jaded, and I know you're a lawyer yourself, but they're saying the only people who are benefiting from crypto are the bankruptcy lawyers.
I'm not sure if that's true. That's like saying the only people who benefited from the internet during the dot-com bubble were the bankruptcy lawyers. The companies that survive will thrive and innovate. It's just a question of and to say it interestingly, to eliminate the riffraff and to have the current financial services infrastructure in the crypto space replaced by a regulated financial services infrastructure under the securities laws.
So what does that look like? Like how can we clean up this space? That's really what we're talking about.
As Chairman Gensler has discussed, and as has always been the case, many of these actions that financial intermediaries are offering securities products or should be registered under the securities laws. And operating in a gray area has allowed them to potentially benefit in the business sense at the expense of their customers. And really the only way for Web3 to move forward on the financial services side is to do it in a regulated manner under the federal securities laws, which have been tried and tested over 90 years or so.
So look, we've got about a minute left, and we're definitely going to get more into detail, especially with Gemini and their Earn product. But why is it taking these regulators so long? How many people need to declare bankruptcy before they do something?
I don't think it's necessarily taken the regulators so long. I think that people conducted business activities that were arguably outside the regulatory norms that existed, and just because you do something doesn't mean the law doesn't apply. You don't say, you don't get to choose which laws applies. The securities laws arguably always applied, and now we're seeing the effects of the excessive innovation without regulation coming to a head here. But what we'll see going forward and what will end the crypto winter is a regulated financial services infrastructure for crypto, whether that's an ATS, an exchange, or a special purpose broker dealer on the custodian side.
Yeah, look, I agree with that. Let's go to break. Let's collect our thoughts, and we'll get more into it. I'm here with Aaron Kaplan on the Daily Drop. Welcome back to Daily Drop. I'm here with Aaron Kaplan. Okay, we're talking contagion. This is really the worry. Is obviously we knew that Genesis was going to go down for a while, but it's really a question of like, well, who are they going to take with them? Who else do you think is vulnerable? I know that we're just speculating, but
many of the financial services providers, the virtual currency exchanges, the custodians have arguably either been operating outside of the law or under a regulatory regime that's not best suited to protect investors. And while it's hard to predict what will happen going forward and who else might have exposure, what we will see is that the implementation of the federal securities laws and the trading of digital asset securities through ATSs and exchanges will help eliminate any of the issues that we've had previously, because there'll be systems in place to prevent excessive risk and to ensure that there's proper enforcement under the SEC.
okay, well, let me make a bad pun here. Is the genesis of this whole situation the Terra Luna collapse? Because it really seemed like that was the starting point of all of these different bankruptcies.
Yeah, I think you could say that. What we saw was that there was a lot of interconnection between the major players in the space. And when one of the dominoes fell, it had the effect of knocking out a lot of other players as an ancillary effect. Obviously, Terra Luna was a major debacle, and there was potential issues with algorithmic stablecoins. That's a completely separate issue here. But I think what also sort of compounded that effect was what happened with Three Arrows Capital, which I believe that either the Digital Currency Group or Genesis had exposure to, and then that was further compounded by their exposure to FTX. And how many major hits can you take before there's not enough funds to go around?
Look, I agree 100%. I will say it's interesting, right? Because Terra Luna was sort of the first, I don't know, first ball to drop or whatever. But really what it did was it exposed the danger of the ecosystem sort of underneath, right? Like I did an episode on the danger of oligopolies in the space. It was one of the first things I noticed, how everything is so interconnected. Right? Do you see the danger of that and how concerned investors are about the infrastructure?
There's definitely a risk, because when you have financial intermediaries being trading venues, custodians, offering some sort of banking activity, when one of those activities goes awry, it has a sort of a contagion effect there. And I think what we're going to see is, as intermediaries are properly registered under the securities laws, that those activities will be properly segregated and boxed off to potentially eliminate any contagion effect.
Well, let me ask you another question, right? Like, are we being unfair by criticizing crypto so vehemently? Because if you think about 2008, the subprime mortgage crisis, one of the big revelations was the TradFi, the traditional finance system, is just as sort of like interconnected, right? It's really like one big domino falls, everything else goes down.
People are quick to criticize new things, particularly new things that have both created a lot of wealth and destroyed a lot of wealth. But in comparison to the financial crisis of 2008, there hasn't been a bailout. And what we've seen is that capitalism is working properly, and that companies that took excessive risks and that were operating in ways they shouldn't are failing. And I think that overall, the current crypto financial services infrastructure will either have to evolve or die. And in that sense, they'll either have to properly register under the securities laws and achieve compliance, or fall by the wayside of history.
Okay, but Genesis and DCG, as I understand it, I mean, they're like good players from a regulatory standpoint, right? Like They're the TradFi component of the ecosystem.
Um, Genesis and Gemini have a potential enforcement action from the SEC that they offered an unregistered security with their earned product.
Right.
It's not my place to comment whether they're a good player or a bad player, but essentially what we're seeing is that there's potential enforcement action and potential exposure that they have as a result of the allegation that they offered an unregistered security. So we'll see how that plays out. But at least what we've seen historically is that the SEC has a very good record when it brings enforcement actions against the crypto space.
Okay, excellent point as always. Let's get more into the Gemini Genesis relationship when we get back from the break here on the Daily Drop. Welcome back to the Daily Drop. I'm here with Aaron Kaplan. We are just dissecting the Genesis bankruptcy, and you made a good reference. Gemini and Genesis, the SEC recently charged both of them with selling unregistered securities. How did that happen?
Essentially, at least from the allegations, to my understanding, the SEC is alleging that the earned product itself was an unregistered securities offering offered in theory to retail customers. And as a result, the way it works under the securities laws is that a security either has to be registered or exempt. And generally, if you're going to offer a security to the retail public, it has to be registered under the federal securities laws. And what the SEC is alleging is that that product was not properly registered. It was a securities offering, and as such, should have been properly registered under the securities laws.
Well, look, I remember our episode when we were talking about the Howey test, and you had a very, very good explanation about the Howey test. But it just seems to me that, and again, this is going to be somewhat controversial, but the SEC, they seem to just kind of swoop in and they say unregistered securities when they want to make it seem like they're doing something. Because the reality is many, many, many different entities have been failing under their watch. So that's great that you have your complaint after everybody loses the money, but what are they actually doing to stop these disasters from happening?
People say that it's regulation by enforcement, but the regulation has always applied. And the SEC has brought a series of actions against potentially or arguably bad actors for many years now, since we saw the Dow report in July 2017. And there has been consistent statements from the SEC that digital assets are often securities and that financial intermediaries should register under the securities laws. So when we see a financial intermediary offering a product that's not properly registered and that the intermediary in theory is also not properly registered, it's just a consistent application and enforcement of previous statements. So I don't think that the SEC has the SEC has done what is reasonable and continues to do what's reasonable in order to ensure that going forward, customers will be properly protected.
I agree that they're doing what's reasonable, but are they doing what's effective, right? And I mean, you don't work for the SEC or anything. I just think, look, the reality is I'm fighting for the investor here, right? Because I'm going, why should investors have any trust in the centralized part of the entire crypto ecosystem when they see these continual bankruptcies and scams and arrests and frauds, all these horrible things keep happening, right? Like, how do we earn back the trust of the investors from a regulatory standpoint?
I think with the proper application of regulation and the registration of financial intermediaries as broker-dealers, ATSs under the federal securities laws, there will be systems in place and the enforcement parameters in place to ensure that investors are protected, to ensure that there's fair and orderly markets, and to ensure that customers' assets are properly custodied and protected. And that's where we've seen the issues occur historically when it comes to a lot of the debacles that have occurred in the space. So while It's sometimes difficult for regulation to be proactive and it seems responsive. It's just the natural course of how regulation operates. And going forward, in order for the crypto winter to end, what we're going to see is the application of the federal securities laws, and that financial intermediaries who are properly registered will hopefully be able to avoid the debacles that have occurred over the last 6 to 9 months going forward.
What a great answer. You should be a lawyer. Anybody ever told you that? So, look, I guess my question is, do you think then this is just a normal part of the process? This is sort of crypto growing up before our very eyes.
I think it's a forced maturity. Agreed. What we're seeing is that the Wild West crypto financial services infrastructure that's existed, since Bitcoin was on the rise initially with Mt. Gox and then replaced by the Money Services Bureau with the Coinbases, et cetera, et cetera. I think that the era of uh, virtual currency activities, particularly financial intermediaries, uh, not being registered under the securities laws is coming to an end. And what we're going to see is this financial services infrastructure, the virtual currency exchanges, the virtual currency custodians, being replaced by trading venues licensed under the federal securities laws, either as ATSs or exchanges, or custodians licensed under the federal securities laws, meaning a special purpose broker dealer. And I think that will put the proper investor protections in place to ensure that these type of events don't happen again going forward.
Aaron, perfect answers. And right before the break, what a pro. We got Aaron Kaplan here on the Daily Drop. Back. The Daily Drop. Okay, well, look, I'm not one of those, well, let's just have some positive news kind of people, because I think the truth is the most important part. But I do think we think about the future, right? It would be nice to have a little bit of hope, or at least to start moving in that direction. Like, do you believe in blockchain technology?
Yes. When it comes to financial transactions, and when it comes to data processing, the efficiencies of blockchain are real and established. The issues with Web3 are with the financial service providers, who have arguably been operating in gray zones or under the improper regulatory regimes. And that problem is coming to fruition now. Obviously, we are working our way through it as an industry. And this will, as I mentioned before, force us to mature. But what it's being replaced with is a proper regulated financial services infrastructure that protects investors and ensures that going forward, those who participate in the space can trust that they are properly protected, that there's fair and orderly markets, and that they're trading properly, and that their assets are properly custodied and segregated.
And look, we've kind of, my next question is something we've kind of been answering in a number of different ways, but let's just be definitive about it. How can we separate the promise of the technology from the series of high-profile crypto disasters?
Well, we're not seeing an issue with the actual blockchains. We're not seeing ETH and the Ethereum blockchain freeze up. We're seeing more and more financial transactions migrate to blockchains. So that process will continue, and I think it's going to run its course in due time. Again, the issue is with the financial intermediaries, and what we're seeing is capitalism working, in that these financial intermediaries are failing, potentially having regulatory issues, and are being replaced by entities operating compliantly under the federal securities laws.
Hmm. And what's the biggest lesson from all this? What is the biggest lesson, if there is any, from the Genesis bankruptcy?
Financial services need to be properly regulated. And just because one argues that regulation doesn't apply, when one is conducting financial service activities, particularly with retail customers, they have to be properly regulated. And if they're not, you can ensure that there will be potential debacles like we've seen recently.
And okay, so what does that look like? So as the regulations change, because we already have, again, like how many people have been charged with unregistered securities, right? So that's already there. So how are things going to shift to a place where the space is, I don't know, safer?
The space has arguably disregarded that shift, which has been occurring for years. The SEC has come out with the three-step special purpose broker-dealer releases, which govern the trading and custody of digital asset securities. And those who follow those releases can operate compliantly under the law. What we've seen is when people do not follow the regulatory norms and do not understand that there's a normal course of business procedures and there's a normal risk management and there's normal checks and balances that have to occur, that customers will be injured. And the only way to ensure that customers aren't injured is to ensure that there's proper regulation and an enforcement mechanism, which is what's provided under the federal securities laws and with the SEC.
Look, we have less than a minute, but you think this is going to happen, right? Like this space is going to be safe, regulations are going to be implemented. Is that your view?
I think regulations have been have been released and are being implemented at a more stringent pace, and that going forward we can avoid a lot of these type of events. We want to be in a position where participants or investors in the space potentially gain or lose their funds or money as a result of their investment decisions, not as a result of the excessive risks taken by the institution to the detriment of their customers.
Aaron, you're welcome back anytime. You're a fountain of knowledge, and I just appreciate you. Thanks for coming again, my friend.
Thank you for having me, Bobby.
So another one bites the dust. Sadly, we in the crypto media are getting used to covering financial disasters in the blockchain space. While the technology is promising, even inspiring, the industry is badly in need of regulation. You cannot have a professional industry where key players are declaring bankruptcy as a routine practice. The space will grow up, but how different will it look from the original vision of an alternative economic system free from the shackles of human corruption? We'll see you next time.